We're going to want to be able to check this out later. And it is just sort of a way that I've traded, and this is something I've actually taught to some of our traders. There's only a few of our traders that know it, and it's a lot more simplified method than we've used before. And if you saw the videos that we sent out, we sent a few videos out. We sent out some images of some recent trades, just the S&P 500. This isn't anything special, and but it's just a really, really clean chart. And so what I want to do is go through it with you and do an overview with you. And we'll have a little after party as well after this, where we're going to go through and talk about a little bit more detail for you. But I want to make sure you just sort of understand what it is and how it works. Thing just not starting right. There we go. And walk through it step by step. So don't get overwhelmed. I just want to walk you through it on each piece. First thing I got to do always, throw up the disclosures. Trading involves risk, etc. Make sure that you know what you're doing before you do it, and make sure it's the right thing for you. This is not advice. All that fun stuff that we got to throw up there. And it's good. It's wise to put that up there to make sure that people do understand that there is obviously risk in trading for those that are new. And hi, and say there, man. How's it going? So you've been with us for a long time. All right, so let's go ahead and get started. I know we were letting everybody get going, and we're ready to go. What we're going to talk about today is the Apex Elite MVP trading method. And this is a method I've been developing well over 10 years as a trader. I'm not a coder. I'm not a programmer. I have a couple programmers that work for me that are always, I get an idea. I'm like, hey, I want something that does this. I have a couple full-time programmers that, help me and make my tools. And Apex has sort of grown as people have wanted to also use some of those. And it's actually helped me pay for some of the tools and the toys that I like to use as trading. So a lot of people go, why do you teach if you're a trader? Okay. Why don't you just trade? We've all had that comment, right? I had that comment before I ever taught. And I was actually pretty resistant to even teaching. Somebody had to get me into it. And they're like, come on, man. People have went through all this stuff and you wasted a ton of money yourself on half these courses that were out there and all these things, and give some of that back, help people out. So what I want to do is I want to help you be equipped to trade like a pro, and that's why I share what I do. I trade every day. I do live trades. I trade on the radio live in front of people, but it's a live webcast. And I have a radio show 5 days a week. I am an exchange partner with the Nadex Exchange in Chicago. I trade futures. I trade Forex. I trade some stocks, not that often just because of the leverage. But it's not that they're bad and didn't work. It's just it's not the most effective use of my capital. I traded options as I started out as a trader. And now I really focus more on futures and Forex. And I usually hedge it. So I have some cool methods I can teach you on that later. Don't want to get too off topic. But what we're going to talk about today is the ultimate chart and volume system. And like I said, revealing this really for the first time, where I walk through all of this step by step for you. And so the first thing I like to open up with is, a professional trader. This is a trade like a pro event, right? So a professional trader, what is their secret? And what separates a professional trader from a wannabe, right? What are some of the things that you can go in and do? And, well, the first thing is they learn how to see the market differently. What do I mean by that? Instead of being a trader who goes, when it gets to this line, I'm going to buy. Or when it gets to this line, I'm going to sell. When it hits support, when it hits resistance, I'm going to sell when it hits, resistance. I'm going to buy when it hits support. If you're thinking that, so is everyone else. Okay? Now, whether or not they're going to buy or they're going to sell when they get there and what their plan is, who knows? But, like I said, if you're thinking that, everybody else is. Well, what does that mean? That means that there are orders stacked up. A lot of accumulation of orders. And instead of being the person that's going to get in when it gets there, you start thinking about one step ahead. This is a professional trader. They think one step ahead. They actually think It's going to get there. Think about how many times, think every trade you got into, okay? Nearly every single trade that you've entered, you've been able to do what? Get in. Why? Because it got there. And most of the trades that you take get there. They get to that price, whatever it is. Fib level, support, resistance, pivot, 12 different moving averages crossing over, whatever. You're really good about calling it getting there. It's always the what happens next piece that messes you up. So why don't you use what you actually have figured out your edge is? Why don't you stop getting in when it gets there, and why don't you start going, hey, I would get in when it gets there? What does that mean? That means the herd is going to be getting in or getting out. There's going to be a lot of orders there. What does that mean? That means that the market's going to go there. Why is the market going to go there? Why does the market exist? Why does any market exist? It exists to fill orders. That's it. Why does the grocery market exist? It exists to fill orders between you and the bread company, you and the milk company, you and the cereal company, you and bananas, whatever, Del Monte. That's why it exists. A market exists to fill orders between buyers and sellers. Or as Kelly just put, to feed us. Exactly. So same thing, right? But that's, ideally. That is feeding somebody. Okay? So, if that's why it exists to fill orders, and if you're a market mover, okay? Or maybe you know a market mover, maybe you don't, but just think about it. If you were a market mover, if you're going to go and move 1 million shares of this stock, or 500 contracts on this, or whatever, you need to know where you can get out of the trade. You don't just want to get in and go, I hope I can get out there. You don't just want to start selling in the middle of no man's land where nobody's there, because then it'll just drop on you against you. You need to know where the market can absorb your orders. Where would you look? Where would traders get in or get out of a trade? Where would their stop losses be? Where would their entries be? It's not so much about targeting your stops, because they don't target your stops any more than they target your entries. Okay? It's about where the order's stacked, and that's what drives the market to that point. And when you're the consumer, you're thinking about getting in. When you're the supplier, you're thinking about getting out. And you're using that as an edge. And it's just starting to learn how the market works. And I'm not saying you have to go into insane detail on this, but when you start looking at it, I have one of the videos on our site. I talk about how the market works, and I talk about volume in the market. And I go through this in a lot of detail. It's about a 30 or 40 minute video. And you start looking at charts after you do that, it opens up your entire eyes about how the market works. But you got to think like a market mover. I'm not talking about market makers, the guys trying to make bid-ask spread. I'm talking about market movers who actually move the market from A to B to C to D. And if you have enough, you can do it. I've moved a couple markets, not that often. I don't try that. Sometimes it's not intentional. But I've sat with traders who have actually moved markets. They're like, okay, I'm going to move Microsoft from this price to this price, this price to this price, now this price to this price. And I just literally watch them do it. They show me how they move the markets. And that's actually the basis of the Apex pattern I'll be showing you. Something else they do is they know how to filter out the noise. There are so many things that you can look at. Right? There's a bazillion indicators you can stick on a chart, which pretty much are almost all, if not all, lagging. And you try to figure out how to make them forecasting, but at the end of the day, at best they're confirming, okay, of what's already started to happen. And that's not necessarily horrible, but how many do you really need? And if you have oscillators and you have trending and what filters what confirms what makes what confusing, because you don't even know what to do with everything that you've been throwing on your chart. And you wonder why your system changes every 15 minutes. Okay? Well, it's because you can't even make a consistent decision. You have a bunch of noise. Part of that noise is actually going to be about bars. We're going to talk about your bars. What kind of bars are you using? Are you still using time-based bars for catching trends? Now, we'll also talk about ways to use them for scalping and things like that. There'll be a few different techniques I'm going to teach. I'm going to talk about catching counter trends. But especially if you're catching trends or counter trends, you really got to filter out the noise if you're going for those bigger trend and counter trend moves, whether it be intraday or multi-day. The other thing is they have a proper expectation of market movement. Most traders I talk to have absolutely no idea about statistics. I say that word and half of you are like, oh, goodness. Okay? I'm not talking about sitting down and doing, quantitative math and putting all this stuff together. I'm just talking about the simplicity of having the proper expectations of how far the market move this hour, or in the next 2 hours, or today, or this week. Why would that be important? Just to pause for a second to make you, get a little bit of engagement going. Type in the chat box there, why do you think it might be important to do that? To know how far the market should move in a certain hour or multiple hours. Awesome. Okay, I got a mean precision coming on back to the mean by Mike. I got profit targets by Paul. Entry and exit points by Brock. To know when to get an out by Kelly. Find my exit by Raymond. Define targets. John, you know when to get out. Because I'm going to trade a certain part of the day. Jacob, that's very important right there. Like, when should I trade and what should I expect at that time of the day? On a slow day, it really helps. Yeah. And also know, I'll go into that even more. Setting targets, when to get out, pick proper strikes. There you go. Filling limits. Knowing when to get in and out of a trade. Calculating your target. Knowing what volatility should be. Knowing when I can sleep. So how many ticks it moved compared to another. Yeah, so you can see there's massive value. And most people at best have maybe some pivot points. Maybe you got some Fibonacci levels, or maybe you're using standard deviation. Okay? Those would you say it's probably about, ATR? Yeah, of course, ATR, very common. Average true range, which is sort of almost like a standard deviation. Not using the same formula, of course, but just an average range. But here are a few problems with some of those, or maybe all of them. Their lack of specificity. Okay, what I mean by that is pivot points have nothing to do with anything. They magically do seem to work because enough people use them. Okay, but they really don't have anything to do with why the market should bounce off that point, except for, I take this number times this number on the close and multiply that times 5, and that's my pivot 1, 2, 3, and all that stuff. Or Fibonacci's. Well, they are the magical numbers, and they do work, and it is really cool how I throw them on a chart, and I see the value to help you see it better if you really get it down. But they're very paintbrush oriented, right? You can really make a fib say what you want it to. Right? Fibs can easily fib. And I know some great traders that use fibs, so I'm not knocking them. I'm just saying they don't really tell you the expectation. It's like, well, if it does this, then this. Well, if it does this, then this. It doesn't really nail it down. Standard deviation. What is that? Well, that's basically the bell curve. We've all heard of the bell curve. Bell curve's great. But for a daily move, that's past movement. Which isn't horrible. It's decently accurate, but it doesn't really accommodate constantly for current market movement. So we'll talk about how to get a little bit more accuracy than standard deviation. Bollinger Bands are another method, which is also a standard deviation indicator. Okay? ATR, average true range of what? Well, think about that. It's the average true. Let's say you do a 20 ATR. That's the average range of the last 20 bars. What is the number one disclaimer in trading? Past performance is not indicative of future performance. So, ATR really doesn't tell you when it's going to slow down or speed up. It has nothing, because it's also about the last 20 minutes of that hour. What if that's a slow hour? What if you're talking, let's say 12 to 1 versus 12 to 2, depending on whatever bar size you got, versus 2 to 4 a.m. when Europe opens. So, what ATR is that including? What time frame is that including to even make it an accurate, indicator? And so I'm going to talk about a few methods to help you have more accurate expectations down to the hour, the day of the week. Okay? And anything from a minute all the way up to a week. The other thing is they know how to read volume. Alexander, you brought up volume also. So proper expectations of market volume. If you know how far you should expect the market to move, some of the thoughts were, hey, I know what, look for a mean reversion, go short, take profit, things like that. If volume is exceeding if volume is exceeding the expected volume for that time, and the market's starting to push out of that expected range, what do you think probably happens the majority of the time? What do you think happens next? I got really high volume, and I just closed outside the expected range with volume a lot higher than it usually is. Do you think it reverses? Or do you think it keeps going? If it's a massive spike, it would reverse. If it's just exceeding the expectations, the majority of the time, it is going to actually keep going. Volume precedes price. Okay? So, and I'll show you a couple ways to tell the difference. All right, so we'll look at that. And like easily tell the difference. One of the things that always annoys me as a trader that I'm always trying to make sure I don't do or that I improve upon doing whenever I'm teaching other traders is not this, well, if I turn my head sideways, I see it. You know, well, it makes a lot of sense on the left side of the page, but can you show me that on the right side of the page? So my goal is to help you see some of that today, and, you know, hopefully at least no matter what you walk away today, you know, had a little better idea of how to read the markets, and, you know, maybe more than that. I think everybody can agree trading is not as easy as we want it to be, and it's not as hard as most people think it is. Right? Would y'all agree with that? Like some people, I mean, they come in and they're like, "This is impossible." You know, you tell them what you do, and they're like, "What? You're a trader, man? You must be a math genius." You know, it's also not as hard as a lot of educators make it. You know, like the only way you can do this is if I'm in the room with you and telling you when to buy and sell, so you need to follow along with me and see how much sense that makes. But there's no way you can duplicate it. So maybe they're good, maybe they're a really good trader, but it's pure experience. There's no system in there. Okay, and so it makes it look really, really, really difficult. And we all want it to be easy, but it's not going to be pure red and green arrow. Do y'all agree with that? I mean, just in your live experience in trading, you know, do you agree that trading is really not down to just one red and green arrow with everything lining up? Now, you want the ATM robot. I want the ATM robot, right? Does everybody on here want the ATM robot that's just going to make you money and you can go on vacation and just, you know, occasionally send in a wire? I mean, that would be great if it worked, but the robot will fail. Will always fail. Even if it did work, it's not going to continue to work. Okay? It would have to constantly be reprogrammed because the market constantly changes. So, it's not going to be red and green arrow. And the sooner you will embrace that, okay, that's not just, I mean, that there's a little bit more to it. The red and green arrow are good for you if you understand what's behind them. And they're good for you for giving you a basis for a system. But what if the news is coming out? What if volume's exceeding expectations and a bar just goes the other direction? You know, there's that, just reading the markets. And I'm not talking about gut. I'm not talking about opinion. I'm talking about the bobblehead on CNBC, you know, MSNBC. I'm talking about just what the chart says is opposite of the green arrow. Well, I don't know, got a green arrow, you know. So, exactly. And so, it's not as easy as we want it to be. And the reason I say it's not as hard as most people think it is because it isn't. I think most people have made it really hard because they're trying to make it really easy. And I'm talking about traders now, like the people inside the trading community. We've wanted so hard for it to be easy that we've made it really hard. And that's why we hop from system to system to system to system. So, you know, Alexander, he brings up, you know, even the sophisticated algos are being monitored by professionals. They're sitting there. They don't just, you know, turn them all on and go. They're looking at them, they're watching them, they're watching the risk management, they're making adjustments, they're adjusting as implied volatility changes, you know. And, of course, they continue to upgrade that algo and add more and more of that human decision in, but it's a never-ending thing. So, well, where Tony says they watch Kramer. That probably works, too. So, Cal, I would say that Trading is harder than most people think it is because they want it to be really easy. But it's not as hard as they think it is if they'll sit down and just accept that if you learn a little bit to read the markets, you'll understand the why. If I put something on my chart, there better be a why it works. Okay, why do I use that? I'll have good traders that I respect. They'll come to me all the time. They'll be like, check this out. I look at these forks and look at this and like see if I cross these 45 things. Look at how easy that is. And I'm like, one, that's not easy at all. And two, why would that work? Because if you can't tell me why it would work, I would have no reason to understand why it would work tomorrow. Okay? So this isn't even like profound, but it's one of those like moments you have to come to as a trader to go, okay, I'm going to stop looking for just stupid easy, but I am going to start looking for simple easy, meaning something easy enough I can duplicate it time after time after time again. But I may actually have to look at the market a little bit. Okay? So to do that, you're going to need a system. Yeah, use the KISS method. Exactly. Keep it simple. No, leave it there. Use a system. One, you need to have proper expectations. We already talked about that. If you don't have proper expectations, you're going to hold on too long and it's going to go against you. Or you're going to go, no, it's still going to reverse. It's still going to reverse. Like, that thing is going. And you've been reversing all day long. And I'm sure nobody wants to answer this poll, but if I put a poll up there, how many of y'all were shorting the S&P today, I'm sure there would be a high percentage that raised their hand. Because it moves so slow. Oh, it's got to go down now. You see my RSI? It's going down now. Right? So, I've been there. So, yeah, the last hour, good for you. But, I mean, I've been there. It's gotta. No, it don't gotta. So, drop the opinion. But, I mean, have proper expectations. So, if it's gotta because the chart says it's gotta, not because you feel like this thing's just moving too slow up. It's gotta turn around. Okay? You need to have very system-based, meaning rules-based. Now, when I say rules-based, I've been mentoring a few traders lately, like really in detail. And with rules, you got to know what to follow and you got to know what to adjust. So there's like the firm rules and there's the adjusting rules. And I don't mean adjusting because of money or gut or fear or greed. I mean just reality of market conditions. Such as, okay, my rule says buy, but the FOMC comes out in a minute. That would be a reason to adjust your rule. Would you agree? It's like, you better be using a defined risk product, like an option or a spread or something like that, if you're doing that. Or, put on a hedge. You need an exact entry, like to the tick. Not, okay, well, it looks like it sort of went above that, so I think I'll go ahead and hop on in. Not that kind of entry, okay? An exact stop loss. Not this, all right, I'm going to set my stop 10% below, and, 10%. What does 10% have to do with anything? 5%. What does that have to do with it? It's amazing, some of the different stop methods. So, you'd have an exact stop loss. You'd have a very defined system for trailing your stops. Otherwise, what are you going to do? If you get in a trade and you don't have your exit plan for a market that runs up all day or a market that goes against you in 5 minutes or 3 hours, what's going to happen to you? What happens what are you going to do if you don't have that exit plan? What do you do? What have you done? What did some of you do in the last week? Wait and see, cry, panic, go walk the dog, blow out your account, get out of the trade. Get out of the trade early, right? I mean, is it possible that you could have got out of it today early because you didn't have a proper method of trailing the stop and you gave up a lot of cash? I'm sure that didn't happen to anybody, right? And if you did, yeah, Kelly says, yeah, I did. No reason but fear. So, and you should have fear if you don't have a plan. because you don't I don't know what to do, so I should be afraid that it's all going to go away, because it could all go away because I don't have a plan to get out of, even if it's going against me. So I'm up now. I'm going to take it. So I just want to make sure that you really understand. You got to have that exit plan. If you don't hit the entry button. That's probably one of the biggest tips I can give you as a trader. Never enter a trade where you don't know exactly how you're going to handle what happens next. Because once you're in, your adrenaline goes up, your fight or flight, be right, defend yourself at all costs, or retreat, okay? So either fight or flight is going to kick into gear. You know it, I know it, it happens every day. The only way that fight or flight doesn't kick in is if you already know what you're going to do. Okay? So we want to make sure we have those expectations. I'll actually show you, Cal, to know what those expectations are. So you want to have the opportunity for no doubt, because you want to have consistency. There's no way you can have consistency if you don't have a defined method. Otherwise, it's just... I remember my wife, this is when I first started trading, and I actually took $3,000. I closed out her teacher retirement account, which only had like $3,500 in it. It was a long time ago. And did really well. And I studied for about a year before I actually traded. And mainly because I didn't have any money. So I just studied. And started trading. And I mean, I made a lot of money. Made 20, 30 grand like in a couple months. And I had some pretty stupid risk management. But I was pretty proud of myself. But my wife's like, "Oh, this is amazing. Show me what you're doing. How are you doing it?" I couldn't even tell her. I'm like, "I don't know, man. That stock's going to have an earnings thing, and it's going up, and I'm buying all those options because they're really cheap, and most of the time it's working." That was it. Okay? So that's great, and you may get on one of those lucky streaks, and if you do, I'm really glad for you, because that's a better way to start out than losing it all in the first week. But it isn't going to last. And probably most of you know that. You've probably been there, seen it go up, seen it go way back down, because you have no way to handle it. And unfortunately, I didn't just wipe it all out. I sort of had some ups and downs as I was growing, but I really started thinking after I made that money. I was like, "How did you do that?" And I'm like, "Oh, wow, I don't know." And that started me thinking about laying out steps, and led to me, actually started sort of teaching in a sense, but more like trying to teach her some, and then I actually taught my daughter. It's a pretty cool story, but I want to make sure that you have that consistency. You have to have the confidence to execute, because who here has been there and they're like, "Well, my system says get in, but I don't know, looking at that, looking at this, and then all of a sudden the market flies and you missed out on it." You have to have that you don't want to hit the button before you're supposed to get in, but when you're supposed to, it's time to hit the button. And I'd say that there's two things that go with that confidence. One is having a consistent system that as you've traded it over time, you've seen it work. The number two thing, which actually it's like, almost like these are number one, number two, they're not even in order, is you need to have proper risk management. Okay? Proper risk management. If trading is exciting to you, and this is one of those things that I guarantee you, like 80% of you don't want to hear, because I didn't want to hear it either. If trading is really exciting, and I'm not talking about like, you knocked it out of the park today and pull out 10 grand and you're like, sweet. Obviously, yeah, you should celebrate a little bit. But if every trade is a heartbeat moment away from a heart attack, okay, you're risking too much money. And this is a weird test, okay, and I've actually done this with a lot of traders. It's helped them a lot. I do it a lot of my trading. And it sounds insane. But if you already know your entry and your stop loss plan, okay, you know your entry, you know your stop loss, and you don't risk more, like, okay, that's about $300 risk. You know you can handle that, or, whatever. You should never have to look at your P&L on that trade again. You should just get out of the trade when the chart tells you to. Okay? All right, let's see here. I got a message thing, but I have no idea where. Oh, there it is. Okay. All right. So I'm just trying to build on that main point that this is a weird concept. Try it tomorrow. Yeah, I dare you, okay? Go in and do the smallest size you can of something, okay? Maybe it's 100 shares of stock. I mean, I guess you could do one, but, or one contract or whatever. Do a mini lot, okay? A micro. Put the trade on, put the stop on, and whatever method you use, hopefully you have one, trail the stop, but don't look at your P&L. Like turn your P&L over into points or hide it or put tape over it on the monitor with some, masking tape. Stop making your decisions based on your profit and loss, because as much as I hate to inform you and as much as I wish it actually did have an impact on the chart, my P&L does not have an impact on the chart. The more I look at my P&L, the more it seems to make the chart go the wrong direction. I should trade the chart, not the P&L. So it will help you a lot if you actually learn that discipline, because you'll start paying attention to what matters and you'll stop letting all the emotion come in. All right. Okay, so looking over here and going down the list, the last piece built upon how the market works, not a magical indicator. Okay, now do I have indicators? Yes, but they're not magic. Okay, like they make sense. They're not just there. Okay. If you're going to use an indicator, like I said, whatever you use, it needs to make sense of why it works, and it needs to be simple, not after you've stared at it for 2 months. Like a lot of volume analysis stuff that's out there. After you've stared at it for 2 or 3 months, then you'll get it. No, I mean, you should be able to look at it and get it. If you can't look at it and get it, now you may have to have a couple explanations of it, but I mean, it shouldn't take you more than 5 to 30 minutes to understand at least what any one thing means. Okay? Now, maybe like 30 minutes to an hour to master it or something. But just to get the concept of what it is and why it works, and actually be able to read it without somebody else telling you, and be able to tell someone else how to do it, that's what I mean by not magical. Okay? The other thing is, when you build your trading system, and whatever method you decide to choose, to accomplish the goal of limiting losses and letting profits run, you need a price action driven method to define the steps in your trading plan. And these steps have to account for how the market moves, but also you. Have you all ever thought about that? Like whenever you're making a trading system, you have to be able to actually do it. In your head, in your mind's eye, okay, with your emotions, with your fear. It's like, dude, this thing works. It works like 99% of the time. Whatever. But you still got to deal with the drawdowns. You still got to follow the rules. Like all of that is something that you actually have to take care of, that you have to do. If you won't implement the rules, it doesn't care how good the system is. It has to account for how you think. And I remember when we were building the Apex method, and it became the Apex Elite method. Now it's the Apex Elite MVP method. And as we just added pieces to it, because a lot of the pieces we added were to make it simpler, make it easier to follow, and make it to where you as a trader were able to go in and actually follow the rules. Psychologically, you could deal with the rules. All right. Now, let's get into a few things, and this is going to be pretty quick and short because it's not that hard, okay? I'm going to go and I'm going to talk about cleaning up price action, how to master that, okay? And I'll just go through each one of these steps real quick. And they're pretty simple, and I'll let you know how to get access to our after party, and if you want to know even more detail. But let me, I'll just bring up a chart. We were talking about the S&P. We've been sending that out all week, so let's just open that on up, okay? And here's just the S&P 500. And this is just today, but I mean, I can pull it back and we can look at, anything you want to there. And in the after party, if you want me to look at specific instruments or whatever, you're definitely welcome to do that. Okay? How do you clean up price action? And it's something I mentioned on the short intro video for this webinar. why do you have a new bar on your chart? Now, if you're trading a very time-based sensitive instrument, like a contract that expires every hour, that makes sense. But if you're trading a contract, if you're not trading something that's expiring in the next like 30 minutes or hour or day, where time is not your big issue today, okay? Now, it may be a big issue for you as an option trader, like a longer-term option trader, but as far as intraday or even multi-day, why do you have a new bar on your chart? Because the Earth rotated a few degrees. All right? Why? There's no, 4 minutes passed, 5 minutes passed, 10 minutes passed, 30 minutes passed, 60 minutes passed. You have a new bar on your chart. Okay? Why? It doesn't even make sense. Do you wonder why your indicators give mixed messages all the time? Because they're not doing anything. Like the market's chopping up, chopping down, chopping up, chopping down, but nothing has happened. Let me show you an example. And Artie says, so the win is known. But you can still have the win without actually plotting a bar every minute or every 5 minutes. I still got timestamps and everything else. Just to give you an example, and I'll explain what all this stuff means on here in a second for you. This is a day. Right here. This whole section is one day. But so is this. And notice how it's less wide. Okay, this is yesterday. This is today. And notice this is a day right here. Look at this. This thing's taking up the whole screen. I'm actually going to have to compress it so you can actually see the entire day. All right, so that's one day. There's a lot more volatility, a lot more up and down move. But when there wasn't that much up and down move, I didn't get a lot of random noise on my chart because I'm not using a time-based bar. I'm using what's called a price-based bar. All right? So what is a price-based bar? A price-based bar is a bar that has to move so far in order to make a new bar. What we have what's called diagnostic bars. And they look similar to Renkos. If you've seen those. Or Rinkos. And you can put these. You can make these in candles or open, high, low, close, or whatever you prefer. But the one that Renko doesn't have a wick. Ours have wicks. Okay, that's cool. I've seen some of those before. What else is different about it? We actually go through and we pull every single tick. It'll take a couple minutes. I'll tell you right now. It'll take like a minute or two to load your chart. A little longer than you're used to, because we're pulling every single tick and every piece of volume to build every single bar. This is like 125 days, okay? And that way we build accuracy. So we don't have those weird gaps. We don't have fake bars that are appearing. We don't have fake price. I know real volume on the bar. This is the volume that happened during this price action. Okay, if you go look at most time or price-based bars, you'll see no volume, no volume, volume, because they actually grouped it all into one thing. So you don't have the real volume on that price action. We got the real timestamps down to the seconds there for accuracy again. So I can have speed, velocity, time, all that's built in. I'm not going to put it all on the screen right now, but we can actually show you how fast the bar is going, when it's going super fast, or when it's going very slow. And it's not just a timer; it's actually the opposite of time. It's speed. And but the main point is, unless the market has moved, and this is a 10-tick chart, okay? And to keep it simple for this webinar, unless the market has basically moved 10 ticks, it won't make a new bar. Okay? So if the market takes an hour to move 10 ticks, then right there, that's 30 minutes. That bar right there took 30 minutes. This bar right here took almost 4 hours to complete. This bar only moved 10 ticks in 4 hours. Okay, so that's just diagnostic bars. It's price-based action that cleans up your chart. And you can tell, this is S&P. This isn't special. It's just a very clean S&P 500 chart. And what's really cool is we have, this is actually a brand new, I guess you could say, thing to put on here. If we go in, we zoom in. I had a volatility indicator I made a long time ago to help. Basically, I wanted a trend line that was volatile, not like a moving average or whatever that just kept going in one direction. And I tied it in with a couple other pieces. And again, I don't want to go into all the indicator specifics, but it basically just helped me hug the trend. And after we made the updates, what I found was if I tied that in with this apex pattern that we'll talk about, if I tied those two pieces together, then they actually helped me filter out chop. Because if they were going in opposite directions, then I would know that I probably don't need to get into that trade. Okay? And it made it it's an insanely effective method of filtering out the chop. The other thing it did for me is one of the questions when you're using price-based bars is what tick size should I use? I trade Google. I trade, euro dollar. I trade S&P. I trade gold. I trade oil. I trade bonds. Whatever it is that you trade. So what size should I use? And there's actually the simplest answer is simply start out small, like 6 ticks, okay? And keep increasing your tick size. Now, if you're on stock, you're probably going to start out like at 50 cents. But start out and increase your tick size until, just looking back, you see that a majority of the apexes and the MVPs go together. The red and the green lines up. And, over like the period of months. And that literally, like, almost every instrument, that's all I do. I just open it up. I make sure that the two are lining up. Because if it's too small, it'll be choppy. If it's too big, I won't get any trades. So I want to get the smallest bar size I can where the two line up, where I see red apexes and I see the little squiggly line here, the volatile trend line. And that's all I need to do. And that helps me get the best bar size for any market that I want to trade. So I don't care if you're trading Forex or binaries or forwards or CFDs or stocks or penny stocks or giant stocks or whatever. Any type of futures market, soybeans, ags. That's how you make the right bar size, and that's all you have to do. Now, the other thing is I said, know your expected moves. Okay, so what we do is we do two things for expected movement. One is we have our deviation levels. And mostly on futures and Forex, but we actually now just added them for everything. So we have them now on every market. And with the implied deviation levels, the diagnostic deviation levels, they actually pull the implied volatility. On our server, we get the implied volatility for every options market. Okay? Every options market out there, we pull the implied volatility, and what is implied volatility, by the way? Implied means expected, volatility means movement. And we factor that into a deviation formula, and it tells us how far the market's going to move. Well, how accurate is it? Okay, to make it simple, and we got the blue lines up here, but the easiest way is to go, basically, it should move a deviation high to low majority of the time. Well, that's what this orange line is. Down here, that's when it's moved a deviation. And notice what usually happens is comes down on this green line right down here, this little green thing. That's why it's green. That means buy, okay? And it's going up. So what might I want to do? I might want to hold off on those sells, right? Because I hit the deviation level. Because it came down a full deviation. And then it retraces back up, and now I get a clear sell sign. And there I get a sell, and I could go short. And don't try to read the system right now, because I need to walk through it with you, but I guarantee you it's not hard to do. I just want to understand the deviation level is expected movement. We hit it again this day. We hit the deviation again this day. We hit the deviation again this day. Okay, we hit it again this day. Over and over and over again. And not like a couple days we had a lot more than it, but most days we just hit it perfectly, which is what we should be doing day after day after day. Think pivot levels, but insanely accurate. They surprise me every day how accurate they are. And one of my mentors, who was a floor trader, a gamma scalper, which is an advanced option stock strategy, taught me how to do this. Now, not for this purpose. He was doing it to know when to hedge off his stock, basically to go delta neutral. But I was like, I wonder what happened if I just applied that to a chart for day trading. And deviation levels were born. And you can do these now on everything. So if you find a market that it doesn't pop up with, let us know and we can feed it in. Okay? On the 10 ticks, Same size 10 tick. It's not the same as a 10 tick range. This is a completely different kind of bar type. And I will go into it more. We only have an hour, so. But I'd be happy to go into like all the detail you want on the bars. We actually have a step-by-step bar training thing inside of our, or not bar, but indicator. Like every indicator has its own video inside of our website. In the free members area. But over here we got Apex. Okay, so APEX. Right there. What is that? That's the pattern. Okay? What do you mean that's the pattern? Remember I said how does the market work? The market moves to fill orders. They pull it back to get all these. Let me, I'm going to take, now we talked about the deviation. I'm going to pull them off. It'll make it a little cleaner, a little easier for you for a second. Okay? And here's basically what's happening. You get in over here, you or anybody else, you buy, you start seeing the market's going back up, okay? Market's breaking out. It literally just broke the high by a couple ticks. Okay, we're on a breakout trade. Where are you going to put your stop? The majority of traders are going to put their stops right below this low, 1857.50. Would you agree with that? That's pretty reasonable that that's where most traders will put their stops. So market comes right back down. Okay, 1856.5 nails the stops and then pops right back up. And this is basically the ebb and flow of the market. The market doesn't go in a straight line. And this one pattern, I've been able to use this now for years. I don't need 25 candle patterns and 5,000 chart patterns, and I don't need posters on my wall. I don't have to memorize 1,000 different things. It's one pattern. I don't need a chart. Notice all my bars are basically the same size, okay? Which is really helpful for risk management. I only need one pattern. If I only need one pattern, what does that do for me? It makes it a lot easier. Okay, keep it simple, right? Like the magic is not going to be in figuring out that perfect, 25 pattern combination, because now you're a pattern pro and you can do this without a problem. Okay? So a question comes up. Is this swing trading or is it day trading? Which one is it? Yeah. You can do both. So, you can hop in and you can take, there's, every time you see an E bar, to make it simple, every time you see an E bar, it's an entry bar. So alert for A, P for pivot, E for entry, X for confirmation. You don't have to hop out. Okay? And so you could have got in, let's just back up on the S&P. He said swing trading or day trading. So right back here, so we get a short trade, we take that down for a few days on the 10th. And the 11th, and then right here on, so was that the 10th that we got in? Yeah, so on the 10th, went down on the 11th, and we got out of the trade. Okay, and we got a nice move there of 30 points. Okay, and then we get a chop filter, remember? Said if the MVP, this green line and the red, that's a bad combination. Don't do the trade. Okay? And there's another short entry. We'll talk about those. But then it all of a sudden starts taking back off, and we finally get a fully confirmed trend. Some of these are just scalp trades, you're done. But when we get a fully confirmed longer trade, now this trade, you could be in this trade for days, or you could get in, get out of the trade at the end of the day, get in, get out of the trade at the end of the day, get in again, get out of the trade at the end of the day, get in, get out at the end of the day, or you could be adding on to your position as it's moving in your favor, which you should be adding on to it. You could try ordinary Renko bars, but I wouldn't, because they're not accurate. They don't pull accurate volume, which is very important. The Renko bars in Ninja don't actually have wicks. And we actually tie in a 50-100% setting on this. They are completely different. So basically I'm just saying I wouldn't do it. I would use these bars. And I'll go into it in more detail, but I just, we only have limited time, but you don't want to use ordinary Renko bars. You don't want to use tick bars. Like, these were built, I spent about 2 years working with one of my programmers on making these bars before we finally got them where we wanted them. Just the accuracy level is insanely important, because you've got to have that accuracy for that volume. So, yeah, we go down every single tick. Yeah. All right, so one trader asked, because obviously, Rod, you're an Apex, you know about Apex. So would you say Apex is more for advanced traders and your boomerang strategy is more for beginners? I would say it doesn't really matter. The boomerang strategy is a scalping strategy you can do inside the markets a lot. It's going to be trades every hour. boom, 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 constantly going. The Apex strategy is more sit back, get a couple nice big trades a day is what you're going for. Maybe, I mean, today there was one trade on ES. I don't know how many you need. Do you need 10? You know? I mean, how much was the trade worth? Came up, and it closed out. And let's just say we took it all the way to the, I mean, 6 points. One trade, one commission. That's not bad. So, P means pivot. Yeah, this is for futures, Forex, stocks, even indexes if you want to put it on options. So, we even have CFD traders, forward traders. Yeah. It's how the markets work. So you want to know your expected move. You want to know your expected volume. Okay? Why? Because volume tells you when to expect a breakout. When you expect the range to be exceeded. Watch what happens as the market's going down. We have high volume, and now check this out. The market starts actually going the other direction. It closes on the other side of the expected range. We expect the market for this hour. That's what these little green and red boxes are. They're not hard to read. All it is, that's how far we expect it to either move up or down during the hour. Every hour. That's why you notice how many of these are staying inside the boxes. Except for when volume is exceeding expectations. It goes the other way. We've been in a short market. It breaks out the top side with volume. This orange line here is expected volume. Blue line is actual volume, just your normal volume. And when expected volume is exceeded by actual volume, and in the other direction, that's a great idea for a reversal. And then I got like 100 other things telling me to go long too. But right there, we got the MVP saying, hey, go long. I actually have 4 time frames that are being checked in the background, even though I'm not looking at time frame charts. I'm even checking out trends on time-based charts in the background. And all 4 of them are actually saying, go long. That's what this thing is, like 1, 2, 3, and 4 minute bars. And you can make it whatever you want to. You can make it bigger, whatever. But are actually going in, and it's telling me the trend on those bars. So I can reference smaller or even larger time frames to see what's happening with the trend. It's like, hey, all the smaller time frames have flipped. It's time to go. And what I like to do is any entry I get, I actually want all of these down here to line up. So whether it be, the MVP go long, or whether it be Apex with the E right there go long, I want on my entry bar where I actually get in, which is going to be a few ticks above the E there, I want all of these to be green. It's just a confirmation. It's basically saying there's multiple trends on this one market without me having to have 12 charts open go in one direction. Another really cool feature about our expected volume, I'll show you this real quick. Any of you trade Forex? A couple Forex traders out there? Okay. What do you do for volume on Forex? How do you handle it? How do you monitor volume on FX? No FX volume. It's only tick volume on FX, right? How do you get expected volume on FX? We actually have programmed this. It's really cool. Not me, but Ben and, Ben. We got 2 Bens. Paul, these guys all get together. They do really awesome things. And what they did is I said, I want this to use the futures Forex volume on my futures trades. And so we went in and we made it work for, basically every combination of Aussie, Euro, Pound, Yen, New Zealand, Franc, Canadian, and Dollar. So any combination of those 7 pairs, we actually pull the futures Forex volume, real volume on an exchange, and plot it directly on your Forex chart. So you get accurate volume, not random tick volume. That doesn't really mean anything. And it used to be you have to have like a data series and add the volume, and if you want to change stuff, you have to redo the entire. It was a mess, and so this right here made it where it automatically just does it. We actually, if you want to use tick volume, you can. I don't know why you'd want to, but you can set this thing to false. Okay, but we just made it automatically do it. So an entry would be like 3 ticks above the E. Your stop loss, if you want the simplicity of the system, 5 ticks below the P for the pivot. because that's where the market stopped filling orders on the way down. There was no more aggressive selling demand below that. Market started to rise back up. So the momentum went in our favor. We have our stop there, and then we trail with the MVP line. Literally, that's it. This little dashed offset line right here. And notice I will move it down some. Now, I'm not going to go negative from where I started, but it'll actually go backwards. And it won't go backwards a lot. You'll notice that. Like, it'll never really just go way, like down here. But it's giving room for the market. It's looking at the volatility. It's going, hey, volatility's picking up a little bit. It backs off. Keeps going. You know, if I scroll the screen on over, say you're still in that trade. Go, haven't got hit yet. Haven't got hit. You just adjust it as you go. And that'd be a long trade. Be an awesome trade. But right there, I mean, all you did is you entered 3 ticks above the E, you put your stop loss 5 ticks below the P, and you immediately started trailing at your stop with the MVP offset line. That's it. Pretty simple. Like I said, I mean, it doesn't take you long to learn it. A short method, 3 ticks below the E, put your stop off 5 ticks above the P, try your stop down. That was a really small profit. So that was just a couple points. So that's like a 40-point profit right there. At $50 a point. So you can do the math, but a couple grand over a few days. So it's very accurate. But, is it worth it? Is it accurate? We're about to talk about that real quick. You can join in on each E. Okay? You can catch reversals with the apexes, the very first apex. You can catch them with the right here with the arrow, the MVP arrow, and we also have a method we call BMX for barely missed X on the apex. It's a little more advanced, but I'll teach you that. It's not hard to do. It takes about 20 minutes to understand it. Once you got it, it's like if you can add to count to 3, you can do it. We talked about exactly where to set your stop, 5 ticks below the P, how to easily trail your stops. Talked about how to filter the choppy markets by simply making sure the apex and the MVP go together. Okay. We also talked about, being able to know how far the market's going to move each day. Whoops, that's a different chart. But how far the market's going to go each day, each hour, each week, whatever time frame you're trading on. So if I'm trading on a daily, it's good to know my daily range. And, check this out. The market right here, remember we said 1 deviation? It's the expected move. Right as we got to 1 deviation, when this line hit orange, look at what happens next. Pulls back. Not a big surprise. We're near the end of the day. We just hit a deviation. There's only 45 minutes left in the trading session. How much further do you expect to move with 45 minutes in the trading session when you're at the expected movement on the entire day? Not much. And if you got it right there, you could have actually kept another, about 5 to 7 points in your pocket, which is about $350 on the S&P. MVP means momentum volatility predictor. So just the momentum of the market is considering the volatility of the market to basically predict where the best place to put your stop is. And talked about knowing how far the market will move. Talked about chop. And basically, you can apply it to whatever market you want. These are a few examples of just charts. I didn't bring a whole bunch up. I wanted to show you current stuff. But here's the Aussie dollar. Here's gold. Several gold trades. There's Apple. There's S&P. It's actually showing the BMX method and how we grab the reversal and we filter out the chop. So summary. The goal is to let your profits run. So make sure you let your profits run by trailing your stop. And here's another example. I got gold. I got Russell. I was doing a whole X hit and everything. And I just don't want to run through all this too fast for you. But we got new piece, new pivot, new pivot, new pivot. And we're just trailing the stop all the way down. This is a Russell. I love trading the Russell. It's probably my favorite indice. I got gold, just because you get more trades. Like I said, some of these are just sort of repeats, putting a bunch of stuff together. NASDAQ, sure got some NASDAQ traders in the group. But a lot that we went through, and like I said, there's no way we're going to get through everything in an hour. But I wanted to make sure that you just, would this help you? Would it help you to could this potentially help you to know expectations on hours, expectation on volume, to clean up your charts, potentially to have something to help you with the trend, to know when volume is exceeding expectations. whether you're using the Apex strategy or whether you're using whatever system you got right now and you're just trying to figure out that piece to help you tune it up. Like maybe you don't even use Apex. Maybe you go, you know what? I like using RSI with a Bollinger Band on it with a 20 period moving average, and it works pretty well. But if I had those expected ranges to help me confirm that RSI, that would really help. I have traders that mix this up in all different ways. Obviously, I have a lot of Apex traders too. So there's a lot of different ways that you can put all these pieces together. All right? And so here's what we're going to do. How much is this going to cost you to try out? All right? And put it all together? Nothing. Really. Hop on in. Go to our website. I'm going to give you the link here in a second where you can actually check this out and get a free month of access. I'm going to hop in the room tonight here in a couple hours and go through a little more detail for you. We're not in a rush. And but you can try it all out for free for an entire month and see if it will help you. Ask unlimited questions, get full access. If you're already an Apex member and you've already used trials, then I think it'll show you a 2-week option. Okay, but no matter what, you get at least 2 to 4 weeks. If you've never tried out this before, you at least get 4 weeks. Also, we have, I don't know if you're interested in binaries or spreads or you don't care, okay, but you get access to a lot of additional information too if you want to learn about how to do that. If you've been curious, all of our stuff there. You're going to get everything, the bars, the sizers, the timers, the ranges, stuff we didn't even talk about today. Pattern recognition, the velocity bars, which shows you the speed of a bar, not just how long it takes, but how fast it goes. And basically everything. So that is included. If you want to try this out, we're doing a promo for 4 weeks, and we're actually going to put up a new course based on some requests on some stuff that we've done. We're going to have a new course that's going to go up. But to start that off, we're going to do a little kickoff party tonight at 7 o'clock. So sign up right there, ApexInvesting.com/ninja promo. And what is the promotion? Why is it a promotion? What we're doing is if you go over here, you click on the page, we're giving you a month free, okay? And usually we charge $200 a month for $2,400 a month or $2,400 a year. If you sign up during the promotion for this free 30-day trial, which hopefully you'll come in, use it, and make your money before the 30 days comes up, okay? Which means you do have to get in there and learn it, but I'll help you. I'm there, okay? If you'll do that, then what we're actually doing is a plan for $1,350 for the year. So we usually give people 3 months free. If they sign up for a year, it's $1,800 instead of $2,400. So we're knocking another 25% off that, making it $1,350 for the entire year. I mean, just 1 or 2 trades can pay for that price. And that link there again for you is ApexInvesting.com/ninja promo. So it's ApexInvesting.com/ninja promo. And when that pops on up, and I'll put the webinar right here too, by the way. That's where this webinar will be posted for you. Just scroll on down and click buy now. Okay? Fill all that out. Submit. And since you are getting the promotion, like I said, it's 30 days, full access, discount. It will be charged at the end of the 30 days. But what if you try it out and for whatever reason you decide you don't like it? Okay? I know that's always a question that comes up. All right? It's really easy. Just log in. Just go to questions. Go to help desk. Submit a ticket. And just say, hey, thanks, but no thanks. Or preferably, hey, I don't get this and I need your help. And we'll be glad to help you out. But it's that easy. Just do that. You'll actually get a ticket ID number. Okay? It'll be, time and date stamps. You'll get an email confirmation. So you don't have to worry about that. But just make sure you hop on over there to ApexInvesting.com/ninja promo. Fill the page out. And as soon as you do that and you log in, where do you go for the trade room tonight? Okay, what do? Hop up here where it says Apex Elite Room and Tools. 2 things, and up to you. You can wait until the thing at 7 o'clock tonight. You can start right away. You can download the toolkit. If you go to this page, then it will actually download it and install it for you. You don't have to send us your machine ID or anything. It actually will link your account directly to the member site. It'll know that, hey, you're allowed to use it, and you can download it and you can install it. Okay? And then to access the Elite Room, just right there, access the Elite Trade Room. And it has information. Hey, get in there, be specific. But I mean, at the end of the day, click this button. It'll launch the room up, and we'll be able to share. We can actually share multiple trader screens. Right there, it's pretty quiet right now because everybody's on the webinar here. But we'll share screens in there. We can talk in there and help you out. And we'll do a little more. Let's get into the meat of it tonight. So, let's see, what questions do we got? If you're a current member, okay, this is really important. If you're a current member, make sure you log in first and then go to the link. And if you have any issue, it depends on what plan you're on. If you have any issue, we'll solve it for you right away. Either go to the help desk or go right down here, and John will help you out, okay? The webinar is tonight at 7 o'clock. Okay, so the webinar tonight is at 7 o'clock. That is a Hotcom chat room. Yep. Eastern time. And when does the trial expire? It expires in a week on April 29th. So after midnight on April 29th, we're taking it down because, well, it's a promotional offer. And it's going to go back to $2,400 a year, $200 a month. So if you want to save basically, over $1,000 and try it out for 30 days for free, then sign up. But yeah, so it's open till April 29th, and then the offer's gone. And I'm just doing that because we're not going to offer that all year long. We literally just launched out this expected volume, expected range. We did, yesterday, we just launched out the expected deviations on all the stocks. We can just keep expanding pieces to it. So he says, so software looks like it's really accurate. Can you explain why it's accurate? And well, I mean, what I can explain to you is, because we don't look at time-based bars, and we are trading based on how the market moves. We're not waiting for the magical crossovers. So the entries you'll see on here are faster than any other entry you can get. I'll explain that more tonight. So, hit me with the hard questions, okay? And I'll be glad to answer them for you. And what we'll do after this as well, because some of y'all, maybe you had dinner plans or whatever, I suggest being on here tonight so you can take advantage of it. But we'll also post some additional follow-up webinars under our event calendar. Okay? But tonight we're going to talk about how to install the toolkit. We're going to go through the indicators. I'm going to make sure you got some of these details of the rules down. I'm going to show you where everything's at on the website for the training and the education. And we're going to trade some tomorrow. Okay? Let's see here. So, Eastern time. Actually, the room is always open. We don't close the room down. So, it's just active, usually during the day. Sometimes at night, depends upon the trader group. So, that's going. So, a lot of times we'll have European traders come in, and they're trading the DAX and stuff like that. We have some Forex traders coming in. So, the webinar, after this, the one at 7 o'clock, instead of going over everything, we're going to go into everything. Okay? So, I'm going to make sure you actually understand what's going on. I'm going to make sure you understand the rules, and then we'll build on it from there. So we're going to take you step by step through this. This was just to expose you to what's there, to go, hey, might this help me in my current trading system, or might this be a trading system I'd like to do, or maybe both, and just let you try it out. The 7 p.m. Is right in here. It's not a webinar link. You don't have to register for it. As soon as you're activated, then you'll be able to access the Elite Room. So you just go to Apex Elite Tools and go to the Elite Trade Room, and it'll log you in right away. If you do it right now, you'd actually be in the room at this moment. So, Mohammed, I could pull up $1 for you. And I'm not saying you have to be sign up to get questions answered. I'm just saying if you want a live webinar right now, because we can't go for 3 hours right here, I'd be happy to help you. So I'd say it depends on what your tick size bar is. You can use time-based bars. So yes, that question came up. Can I use time-based bars? Yes, you can. But it depends on how big your bar is. So because remember, if you're using the diagnostic bars, they're all the same size. So 5 ticks below whatever your bar size is. If we get in 3 ticks above, 8 ticks plus your bar size. So it could be like say 18 ticks on Eurodollar, for instance. Could be less. So could be more. It depends upon how we're putting it together. I have a little bit of AutoTrader stuff built in, but not completely. We're actually going through and we're adding more stuff to it. Again, like I started at the beginning, it's not all. I want to empower you to trade. I do want the AutoTrader stuff to help assist you to trade more markets, not to replace you. You still want to be paying attention. So we are adding that in, just piece by piece. But right now, it's not completely automated. We do have the classic Apex automation strategy built in there, though. I can explain. Expected deviations it's based on applied volatility. If you signed up at the website and you can't figure out how to get in, like maybe you signed up before, you can enter your email address or username right here. Okay? It'll email you a password, or you can just ask John right here, and he'll look it up for you right now. Okay? So, Ed, if you can't find your username, you signed up in the past, just enter your information right there, and it'll get you going. Most of the tools can be called by NT strategies, yes. I do 2 to 4 webinars a week, Dennis. So we're doing constant trainings. Yeah, do you have a live trade? Yeah, hop in there. We'll trade live tomorrow. But remember, I want to empower you to do it. You shouldn't need me to be able to do these trades. You shouldn't need me to learn how to do them. You shouldn't need me to continue doing them. I don't want it to be follow the guru. I want to empower you. So after you do this for a few days, you ought to be able to handle it on your own. We keep the trade room open for you to come in and ask questions. But you don't need to follow somebody every day, all day. What if you have Think or Swim? We build our stuff for NinjaTrader. There's things that we can't do in Think or Swim that we can't do in Ninja. A lot of this stuff is not even possible over there. See, again, 7 o'clock Eastern Time. Yeah, sign up. As soon as you sign up and you log in, so go to ApexInvesting.com/Ninja promo, and then go to Apex Elite Rooms and Tools, and you can log into the room, like right now. Also, you can download the toolkit, and you can activate it and play with it for the next hour and a half if you want to while we get going. Okay? So, yeah, you have to put in your card because it's a promotion that we're giving you 30 days free with a discount right at the end. So it's on automation. But all you got to do, if you don't want to do it, just submit a ticket. If you don't see the tab for the Elite Room, you haven't signed up yet. So make sure you sign up first. And if you still don't see it, just ask right here, and John will help you out. And I'll be on there too. As soon as I get off this, I'm going to hop right on that chat. Okay, so I can help you out on anything. Are the boomerang charts included in the Elite membership? Yes, everything's included in the Elite membership. Christopher, awesome. We will not charge your credit card a dime for 30 days. And if you cancel before then, you won't be charged. So no, there is no charge today. Edward, after you sign up, you should be able to go to the link. If the link isn't letting you get access because you're already an Apex member, just let us know right here and we'll take care of you, okay? I use default 24/7 on my charts. The promo again ends on April 29th at midnight. And last thing we got to do, Do you do any trend trading using Nadex, or does one need an AMP account or FX or a better way to go? That sounds like a bigger question. William, hop on over to the forum. If you want to ask questions, if you want to see the webinars, we have everything in here. We have all of our webinar recordings put here. We have all of our questions here. And our Thursday webinars are always open and free. It's just I'm going to focus on people who are signing up right now to get them connected. So that's only fair. So I want to get them going, get them up and running. But I'll definitely post the webinar for you to be able to see it. If you have more questions, you can post them in the forum or in the help desk, where you can ask us live right here. And yeah, this webinar will be up in about an hour, and it'll be posted on ApexInvesting.com/ninja promo. John, it's high. Just hop in and you'll see. Okay, so I got to wrap this up. We already went over. But yes, you can definitely use this outside of trading hours. It depends on what market you're using, John. Just like anything, if you're trend trading, you need a market that's actually trending. But yes, you can use it any time of day or night. Just understand, like, sometimes, like, remember that one bar I showed you that took 4 hours to form? That'd sort of be a boring trade. Brian, it's between my bars, and I'm not going to mention their name to be fair, somebody else's bars that are similar to mine. Mine actually go down to the millisecond and use accurate tick volume, so you get true volume on every bar. Look at your volume and see if you have empty spaces. See where your bars reset, or if they reset. They shouldn't be resetting, and they should be the same chart no matter how many days you load. So that's there's some major, like, little differences, but they add up. I think I got everything. No, we have one last piece. And just to make sure, yeah, that everybody has this on here. Got Craig. Reply. How can I? Hold on. I'm trying to. Can you put that link up there for me, Justin? And then we're going to do the drawing, okay? What is the drawing? We're giving it away. So we're actually going to give it away to somebody here. And you're going to get free access, and you're going to get, for an entire year, and you're going to get a one-on-one mentoring coaching session with me, where I'm going to go into how to trade the Apex Elite method. I'm going to find out who you are, what you're trying to accomplish, account size, risk, everything, and we're going to help you put together a trading plan and get you going really fast. I'll do that for everybody, but, you know, as far as, like, in the room, but obviously I can't do 300 one-on-one sessions. So, Justin, are you there? Hey, man. So, yeah. There he is.
Yeah. Start from